How to trade stock options for beginners. Getting high yields from easy options trading using traditional securities is not normally achieved by average investors. Not many people know about a new ultra-short duration investment which offers extremely high yields. People thinking short selling option premiums or using high leverage to amplify returns is a simple way to make money. Day trading get burned badly when things go wrong. One easy options trading method is to use a security called a binary trade. Although this type of contract is traded only on a very limited number of securities, it offers several advantages over traditional trades, including lower capital requirements, shorter holding period, and a high fixed yield. In today's market, it would seem that this type of easy options trading is ideal given the market's present low yields, high volatility, and tight capital availability. The holding period rate of return on a binary option contract is typically around 70% depending on the broker and security. Yield goes up dramatically for longer duration contracts where a spread is involved. Amazingly, retail brokers don't typically operate a spread on the daily or hourly expiration securities, allowing for zero transaction costs. With low cost and high return possibilities, even minimal cap investors can find a way to make money fast and easy using them. No spread or commission on a typical investment means the money required to earn a decent return on investment is not heavily encumbered by fees the way a standard trade would be. Most retail brokerages offer these easy options trading contracts in locks as small as $30 and a minimum initial deposit of just $100. Try making money with online stock or option investment with just $100 at a normal account. The hurdle transaction costs are just too high. One of the other attractive features of the binary contract is the duration of the trade, which usually is as little as an hour to as long as a day or a week. An aggressive person can turn over their capital 4 to 5 times in a given day, with the opportunity to be making money with each successive capital turn. The fixed short holding period relieves the investor of the burden of deciding when to sell, as these European-style option expirations are designed to be held to maturity, a low-maintenance way of putting your money to work for a short amount of time.